Well, Gamestop and the other Reddit rally stocks had a pretty rough week this past week. Can they? Will they go back up? I will show you what to look for. Plus, I'll do my regular weekly market analysis. We're going to figure out where the markets are likely to go. I'll also look at the day trade of the week on BSQR, and we're going to do an interesting market scan for those who want to learn how to pick hot stocks. That's all coming up. So GameStop, BlackBerry, AMC, the silver stocks, these are all stocks that have been heavily promoted in the Reddit group Wallstreetbets, and they had a pretty rough week, suffering big losses. That will have many who own these stocks wondering if they can go back up or what to watch for. I'm going to show you that in a chart. But the first thing I need to emphasize is that these stocks are not moving on fundamentals. You can't do fundamental analysis on a stock like this because they are really extremely overvalued even after the big pullback. These stocks are trading on supply and demand, and if demand is strong and there's not a lot of shares out there to buy, then they can go up even if it doesn't make sense. However, when bubbles burst, like we saw in these stocks in this past week, it's very difficult for them to gather the upside momentum again. What we have to watch for is two things. One, breaking a downward trend line, and two, breaking upward from a rising bottom. Now, this makes a lot more sense when I show it to you on a chart, which I'll do in just a moment. But you have to be really patient with these stocks and stay out of them until they start to show those signs of reversing. It's a silly argument to say, well, the stock used to be at $400 or $500, now it's at $100. What a deal. Well, remember, it used to be at $6 and now it's at 90 or wherever it closed on Friday. Those kinds of moves do not make sense, and that is not how you trade these stocks. Let's take a look at charts and I'll show you what to look for. So we'll start off with the chart of GameStop. And because these stocks are so volatile and moving with such fast moves and a lot of volume, you want to watch the intraday chart. I would not watch the daily. It is going to be too slow. So what we're looking for is a break of a downward trend line. So something like this is a downward trend line, and we broke it there. However, this low is not higher than the previous low, so there's no rising bottom. Then we break the next downward trend line right in here, but this break is from a low that is no higher than the previous low. Now on Friday, the stock went out with a slight rising bottom. And so if on Monday, for example, it could break higher from a rising bottom, it may be starting to make a little turnaround where it could do a mini rally of maybe 40 or 50%. The problem is there's also resistance. You've got quite a lot of volume that traded in this $100 range. And so when it gets to that $100 price range, all of the people that bought there, and that's a lot of volume, it was trading millions and millions of shares every half an hour. All of that volume is going to be supply because these people are losing and all they want to do is get out at a break even. Now, once it can get through this, if it does, then you're going to have another big wall of resistance up in that price range around 250 because, again, a lot of volume traded there. Now let's take a look at the chart of BlackBerry because it actually started to do what I'm looking for on Friday. And it's a stock that I mentioned in our active live service. So there's your downward trend line. And it started to move up from that on Thursday from a rising bottom. And then on Friday, it broke through this resistance level with rising bottoms, which is an indication that there was starting to be some optimism. So I didn't like it a lot, but I did think that it had fairly good potential because it was breaking higher from a rising bottom. And it ended up moving from 12.5 to 13 and change. Not a considerable move, but this is one where it probably is headed up towards this resistance level at $15. I want to see the break from a rising bottom. I'd like to see strong volume accompanying the break. You see here on BlackBerry that the volume wasn't all that strong, but that's the kind of thing that we're looking for. You can see it over here. There was a low, a rising bottom, breaking resistance at the open, and volume was strong. And look what happened. The stock went up pretty quickly. So that's the kind of thing that you want to watch for in any of these stocks. AMC, Dillard's, the silver stocks, you know the list of Reddit rally stocks. All right, well, let's get into this week's market analysis. And we always start with the U.S. markets. We're going to take a look at the S&P 500, short-term and long-term, figure out what's going on. And I was a little concerned coming into this week because last week we broke some support and we're building falling tops. Now, what I suggested we watch for is a break of this downward trend line, which happened early in the week. We got that break of the downward trend line. And that indicated that the stock market was then likely to move up towards the old highs, which it did coming into Thursday. In fact, at the end of the day, Thursday, it just broke through. Volume was pretty light on Friday, but we managed to make that breakout to new highs. So we've negated the breakdown. We've overcome it. That's good. We've also rallied for a number of days, so there is some potential for some short-term profit taking. When we look at the longer-term chart, we see that that longer-term upward trend line is still intact. We've held that. The buyers are still in control. We had a little bit of a breakdown here, much like we had back there, and then we overcame it the very next week, much like we did back then. And so really the market's still healthy. Is it due for some profit taking? Yes. Does it make sense that the market's made this kind of a rally? Not really, but it doesn't matter. We just do what the charts tell us to do. We don't try to rationalize it, just follow the money. Now looking at the NASDAQ 100, it managed to also close at a new high, and you can see that the bottoms are rising from left to right. The buyers are in control, so we want to stick with the buy side on the NASDAQ. Looking at the Russell 2000, it was a little sleepy here for a few weeks, and the hot market that we had in the small caps kind of got quiet. But this week, it took off again. We broke the pullback, and we've gone straight up for the last 4 days of the week, getting a little bit to the top of the channel. We could go up a little bit more before we hit that. So I'm still optimistic on the Russell small cap stocks. And this past week was a great week for trading, and largely because the money started coming back to those small cap stocks. I think what happened is the party was sort of over in the Reddit rally stocks, and they came back to the broader market. They came back to the small caps, which had been really hot for a number of months. And so they've gone from one party that got broken up by the cops, and they've gone over to a much bigger party in the broader market of small cap stocks. Looking at the Canadian markets now, we have the TSX also had a nice week rallying through this resistance level. We paused there for 1 day and managed to break through. We're due for a pullback because the market's gone straight up for 1, 2, 3, 4, 5 days. Wouldn't surprise me if we pull back a little bit short term. But again, we're healthier than we were last week. And you can see on that longer term chart, that long-term resistance that I spoke about a few weeks ago, where I said, likely we're going to see a pullback, a pause in the upward trend because we've hit that resistance level. Well, we hit it. We got stuck for 3 weeks, and now we're trying to break out again. So looking better on the Canadian stocks as well. The really hot part of the Canadian market is the TSX venture stocks. Cannabis in particular, those stocks are doing really well, and you can see the trend is going parabolic. That means buyers are getting a little bit irrational, chasing these things higher. It's a hot market. No reason to sell it, but be careful because there will be some profit taking. Anytime you get the market going parabolic like that, you're usually on the edge of a round of profit taking. Looking at the commodities charts, let's take a look at the gold chart, and I'm a little concerned about gold because it is really tickling this upward trend line. We tried to break the pullback, we failed, and now we're starting to move down through that upward trend line. Now, yes, you could draw it like this. I think this is a more accurate representation of how the trend looks. And as you can see on Friday, we kind of closed below that last week. That could be an indication that we're going to move down toward this level. So a little bit cautious on gold. Oil, very different. It has been moving higher slowly and steadily on light volume. But again, last week we had a pretty good move to the upside. And I think you're going to start to see money move into the oil stocks. We haven't seen a lot of that yet. And so if you want to start to look for an area that may be on the verge of getting some real strong upward momentum, take a look at the oil and gas stocks. They're starting to move already. Some of them have made some decent moves already, but the broader range of those stocks still isn't keeping up with the commodity, I would say. And so keep an eye on that. And finally, the fear chart. We had that little spike in fear last week. We've overcome that this week. We're back into kind of a fearless market. So my ratings then, US stocks bullish on both time frames. Canadian, I'm going to say neutral long term because we are right at that resistance level, but bullish short term. We had a decent comeback last week. Gold, neutral long term. That could turn to bearish if we make a more profound break of the upward trend line, but I put a bearish rating on it short term. And oil, bullish on both time frames now. The market has reversed that short-term weakness from last week, and it has resumed its upward trend. Trading was good as the buyers have come back to new names and taken their focus off of the irrational Reddit trading. Gold is weakening, oil continues higher, and fear has come back down. All right, now we're going to take a look at the day trade of the week, mostly for educational purposes. I want to show you a stock that was identified by my Active Live algorithm, which runs every day in the Stockscores Active Live service. You can learn more about that at stockscores.com. But essentially, you're watching my analytical screen through the day, and we're looking for something called an action candle. An action candle is one that has abnormal price, abnormal volume. We look at that on the 2-minute chart for day trades. We look at that on the 13-minute chart for swing trades. And there are so many opportunities right now, great trading going on with that Active Live service. We're finding lots of really great setups every day and real strong gainers. So this week I want to show you BSQR, which was a very strong mover on Friday, but more interesting to me is the lesson it presents for the sell. We don't often talk about the sell, but let's jump over to the chart. And first of all, the entry candle was this one right here, the action candle from low volatility. That's one of the key things I teach in the Active Trader course. But here you have a linear upward trend line. This is the 2-minute chart. And there you have this linear upward trend line. Price runs away from the trend, it comes back, runs away, comes back, and then breaks the upward trend line from a falling top. That's a pretty good sell signal. The stock had gone up as much as 15 times its risk. So if you're risking $100 on this trade, it was up $1,500 right there. At this point, it's giving us a decent sell signal because it's breaking that upward trend line from a falling top. And that was at about 9 times risk. So here's the economics. For every $100 of risk, we would buy 260 shares. So if you want to take $200 of risk, you buy 520 shares. For every $100 of risk, your position size is very small, only $777. That's because this stock was so volatile. You might have been able to margin this one. It was above $3 at the action candle. Let's say that it wasn't marginable, didn't require a lot of capital anyway. Still, the economics are very impressive because on that $777 of capital traded, it gave a $900 gain. For every $100 of risk, a $900 gain. That is a 115% return, provided you took that exit signal around midday. And if you didn't, you watched your position basically go back to break even. All right, well, now we're going to go over to the Stockscores Market Scan tool. And one of the things I like to do to practice reading charts, to look for new strategies, to develop trading skills, is look at the gainers from the recent past. And I call this reverse engineering the stock market. We want to look at the stocks that have done really well, look at their charts and see if there are some clues in the chart patterns that we can take something from. Now, this is how I developed my strategies going back 25, 30 years ago. I just looked at lots of charts of winners and looked for things that occurred over and over again. Now, we can do that with the Stockscores Market Scan using some of the filters. So we'll jump over to the Market Scan now. And I'm going to build a little scan here where I look for stocks that have made a gain of, let's do something like 50% over the last 20 days. And just so we don't get real penny stocks, I'm going to say at least $5 in price. And also because I want stuff that's fairly liquid. I'm going to say 5,000 trades a day. Now I run a market scan and it's going to give me a list. Should be pretty long because the market's quite strong right now. And I've got a list of 48 stocks that have done that. Now comes the reverse engineering part. I'm actually going to put this in a slideshow just to blow up the charts. So I'm going to click on the large charts down here in the lower left. And now I can start to look for patterns. Now remember I was talking about BlackBerry and Gamestop needing to break downward trends from a rising bottom? Well, here's an example of what that looks like. There's a downward trend. There is a bottom here, a rising bottom, and then another rising bottom with a break to the upside right there. I call that a bottom fishing pattern. And look what happened. The stock made a considerable gain since then. I would not want to buy this stock now because it has rallied into resistance at those old highs. But remember, what we're trying to do here is look for things that occur on a regular basis and try to gather some new methods. Now, one of the things I teach in the investor course on Stockscores.com is breaks from low volatility with abnormal activity. Now, we do that when we're day trading, but you can do that off of the daily chart as well. So here's low volatility. Here's the abnormal price action with abnormal volume. And that telegraphed the huge move that this stock has made. We have a market scan on Stockscores to find these. It's called the abnormal break scan. And every day I run this, and that's how I find my longer term position trades. Here's another stock that's done great. This stock has resistance here. It broke through resistance with a spike of volume. The stock scores were good. We're building rising bottoms, breaking through resistance. Then we had a pennant pattern break right here. Again, volume increasing, breaking from diminishing volatility, and that stock goes up. So these are the things that you just learn to see after you look at lots and lots of charts. It's what I spend a lot of my course time teaching when I do the different courses that we have online at Stockscores. If you want to learn more about that, just go into the trader training area of the website. There's some videos there that go into my method and how I pick stocks and how we've been able to get really great returns from these strategies. Well, I'll wrap it up there. I hope that you've enjoyed the video, found it educational. If so, please click on that like button. Leave a comment. Do you think the market for these Reddit rally stocks is going to go higher or lower next week? Will GameStop be up or down by the end of the week? Leave your comment in the comment section. I'm interested to see how the vote comes out. Hope you have a great week in the market and trade well.